Hello and welcome back to the channel for another exercise case concerning value-added tax. Well, let's have a look. A from Aachen, Germany, has a factory for the production of machines in Aachen, and he receives an order to construct a production machine for a factory in Munich for a price of 500,000 plus VAT. And now, under the conditions of that contract, the customer also has to pay for the transport of the machine from Aachen to Munich. A then orders a haulier, so a forwarding agent or whoever you call it, from Poland to transport the machine from Aachen to Munich. And on the 20th of June, the machine is delivered to Munich. The customer is charged with the price for the machine of gross 595,000. And when the haulier's invoice arrives at Aachen a month later, then A charges also that amount to the customer in Munich and adds VAT on it. And the question is, how is the correct treatment under German VAT legislation? Was it correct or wrong? That's what you have to find out in this small, or better, medium difficulty case. The first important step, as always, is to give us an overview about what is happening here. So the persons involved are A from Aachen, and we have his customer from Munich, so C from Munich. And we also have another contract relation, A from Aachen, and the haulier from Poland. Now you know that each contract has always to be examined separately. And so here we have transport service, transport. And when it comes to what A has to do, there we have basically two things. Because A has to transfer it. Under the contract, A has to bring the machine to Munich, and A has to hand over ownership in the machine. Now, the first question in such a case, when one and the same or two and the same parties do more than one thing for each other, the first thing we have then to do is to find out if this is then simply one transaction or if it's two. So that's here the important question. And you know, something is a single transaction if an average customer would not split up both parts and buy them separately. And indeed, when you sell a machine, it is always an obligation of the seller to bring the machine to the point or to the place where the machine has to be handed over. It is not possible to split that up because you always have to agree on a place where the machine or the product has to be handed over, and it will always be a necessary obligation of the deliverer to bring the product or the good in question to that place. So necessarily the machine and bringing the machine to the agreed place of handover, let's call it this way, cannot be split up. So this is one single transaction only. Both things are only one thing for tax. And that means for us that we have only two transactions to test. The first one is this. And the second one is the contract relationship with the haulier, number two. Now, it might be that for reasons of convenience, it might be that, for example, testing the relationship with the haulier is more simple, so we could begin with that, because basically it plays no role which of the two contracts we check first. This has no importance, so I propose let's start with the haulier. Oh my god. So let's deal first with the contract haulier to A. Well, the first question will be taxability again, and to test is paragraph 1, number 1 USDG, because it's not number 5. So what we have is the haulier an entrepreneur? Well, he's not from Germany, but that doesn't matter. Yes, paragraph 2, subparagraph 1, sentences 1 and 3. He carries goods through the world for payment, so that's an entrepreneurial activity, independent, constant, and aiming at revenue. Is it within his enterprise that he acts, or does he act as a private person? Yes, transferred by a transportation firm. That's clearly within the business. So paragraph 2, 1, sentence 2, USDG. Is it for consideration? Yes, he demands a price. Is it a delivery or a service? The haulier will very often say, I deliver the good to the customer, but he does not deliver because he does not transfer ownership. You can only transfer ownership in a good if you have ownership in a good. So what he does is a service, paragraph 3, 9, because haulier does not transfer ownership. That is done by the owner. So he only carries the good to somewhere. That's the service. The place of service. Well, where is it? There are two basic rules in 3A. The first one is if the customer is a private person. The second one is if the customer is a business person and acts as such. And we have definitively the second case, so where the customer has established his business. Now, the customer of the haulier is what we can see here in the sketch. The customer of the haulier is not the customer in Munich, but his customer is A in Aachen. So in Aachen with A. That's in the inland. So the whole transaction is taxable in Germany. Do we have an exemption under paragraph 4? Paragraph 4, no. So it's liable to tax. The tax base is the net amount here. Let's say it's 5,000 euro because it is 5,000 euro. It has been agreed as net price. Sentence 1 and 2 USDG. The tax rate and tax amount is 19% under 12.1 of the VAT Act, because 12.2 does not apply for carrying goods through the world. So it's 19% on 5,000, that's 950 euro. The formalities, how the tax is paid, and you remember paid stands for P-A-E-I-D, so the taxpayer is in that case, well, remember that special rule. If you have an entrepreneur from outside the country and you have a customer who knows about the VAT rules from inside the country, then it's far more attractive to address yourself to the inland customer. And that's indeed the case, probably. We have to test 13b. And in 13b, you have always the list of the transactions covered by 13b in paragraphs 1 and 2. And so we begin with 13b1. It is a service. It is a case of 3a2. By the way, I've forgotten something when it comes to the place of service. Because we still had to test if 3a3 does change that. It does not. Neither do paragraph 3a4 to 8, and nor paragraph 3b, a rule which we have not yet met, but will meet later. So that would be a complete answer. Okay, it was covered by 3a2, and the entrepreneur is from the rest of the EU. That means 13b1 applies. Now we only have to check if also the customer qualifies for 13b, for the reverse charge rule. Sentence 1, customer is also an entrepreneur. And that means that strange paragraph 13b applies. And that means in turn the customer from Aachen A is the taxpayer here. Okay. Now, arisal of the tax. That's then also regulated in 13b1 at the end of the preliminary declaration period, during which the service rendered. So, end of June. Invoicing. The Polish haulier must issue the invoice net without confirming VAT, because he does not collect and send them to the fiscal office. That's paragraph 14a by analogy, and it's by analogy because under paragraph 14.7 he has to issue the invoice under Polish rules. That means he can use his Polish VAT identification number or taxpayer's number, and does not need to use a completely new computer program which would be able to write an invoice due to or compliant with German standards. Declaration duties is the next thing, and for that next thing, let's have a look. Declaration duties, declaration duties. There is something which we will learn later. He has, the Polish haulier has to declare the transaction in the recapitulative statement or regular overview over EU internal transactions with VAT ID number of the customer A in Aachen and the net amount. That's compulsory. Number 6, no special details which are not foreseen by the testing scheme. Input tax claims, yes, under paragraph 15.1, number 4, look it up. A can claim input tax for the tax which he paid on the transfer. So far, so good. Now, let's turn to the first thing. Delivery of machine from A to C. The first thing is we have a uniform transaction which comprises the machine and the transport. The transport is only an ancillary service to the delivery of the machine. So for VAT purposes, only the main object of the transaction, that is selling the machine, counts. Everything which was paid, for the transaction is automatically assigned to the delivery of the machine. Ancillary services do not count. That's just a preliminary remark, so let's test taxability. It's again number 1 USDG, the basic rule. A is an entrepreneur under paragraph 2.1, sentences 1 and 3, USDG, acts within his enterprise. That seems to be clear. Yes, selling of machine by machine producer, that's his core business. Paragraph 2.1, sentence 2 says evidently yes, that is covered by his business activities. Is it for consideration? Yes, one surprise. So is it a delivery of a good? And the answer is under 3.1 clear yes. A machine is a tangible good, and selling is transfer of ownership, so of position like an owner, to be more precise. Place of delivery, you know, there are 2 basic rules, 3.6 and 3.7. 3.6 is if the good is moved, and 3.7 is the good is not moved during the transaction. 3.6 is evidently clear. The good is here transported from Aachen to Munich, so where the transportation or transfer of the good towards the customer begins, and this is evidently Aachen, so that is in the inland, so the whole thing is taxable. Do we have tax exemption under paragraph 4 USDG? No, so the transaction is liable to tax. The tax base is another, here comes the fun, 10.1, sentences 1 and 2. Everything which the supplier gets. This is first 500,000, later additional 5,000 plus VAT each time. And as the charge of 5,000 plus 950 is first not foreseeable, the amount is not known, the later demand for this additional money is a change of the agreed remuneration or change of the consideration under paragraph 17. One has to be declared later, has to be declared when the change happens. And that is something for the arisal of the tax, so see below first. So first, net amount is 500,000. Later, it rises by plus 5,000 to 505,000 net. Tax rate is 19% under 12.1 because 12.2 does not apply to machines. And as you should notice here, the 5,000 additional charge is an additional price for the machine. And in the relationship between A and C, there is no transfer for taxation. Everything which is demanded is automatically a part of the price for the machine. So only the 19% for the machine apply. If it had been chocolate, it would be 7%. So first 95,000, later rising by 950 to 950. Taxpayer here is A, the entrepreneur, and the arisal of the tax, sorry, wrong color, the arisal, again wrong color, that seems to be better. Arisal of the tax is at the end of the preliminary declaration period during which the delivery was made. That's for the original price of 500,000. So 95,000 arise at the end of June under paragraph 13.1 number 1 USDG. Now this time it's paragraph 13 and not 13b, because this is not a 13b transaction. And the later change arises at the moment or at the end or during that preliminary declaration period during which change happens. So plus 950 in the preliminary declaration period July. That was next month is when they charge him the cost of transportation in addition to what they charged before. Invoicing details. Charging the additional 950 must be marked as being an additional price for the sale of the machine, because the transport in the relationship A to C is only an ancillary service, so does not count, so that everything A charges to C is automatically seen as consideration for the delivery of the machine and for nothing else. Okay. Declaration duties, nothing special. You have to fill in the text for June in the preliminary declaration for June, the additional amount for July, the additional declaration in the preliminary declaration for July. Nothing special which deviates from the testing scheme. And input tax claims, the customer C from Munich can claim input tax for the acquisition of the machine under paragraph 15.1 number 1, because he bought the machine for his enterprise, and he can do so in the moment when the conditions are fulfilled. He got the delivery and the invoice is present. So claim for 95,000 input tax in June and for additional 950 in July, because that is when the invoices are at hand. That is case solved, done, and successfully finished. Thank you for watching and wish you the best for the day.